All right. What is up, everybody? We are live. The market close on Friday, January 2nd, first trading day of 2026. We are off to a good start, it looks like, in the market. Go ahead and throw any questions that you have for me in the chat. Good to see you guys today. Let's pin that. Okay. All righty. I got a little bit of a different camera setup today, so hopefully it's not worse. If it is, we'll go back to the way that I had it before. Let me know. Let me know if you like the new look. It's a little bit weird with that. There's a glare right there, so might have to keep tweaking things, but that's how it goes. All righty here. Let's see what questions you guys have for me today. How about them silver bars? Let's see. Where's silver right now? Silver is not looking too hot today. I had my video on silver go live yesterday. If you haven't seen that, you can go watch it. But um, essentially, my expectation is that we've seen the top, at least for a while, in silver. Kind of looks like a blow off top. And the candle today, even the candle in gold as well, kind of seems to confirm that, reaching high, trying to get back up to the previous high from yesterday and the day before. Didn't quite get there, and then a kind of a crash back down. If you're bullish, you don't really want to see a big wick on the top of the candle, closing near the lows of the day. Long term, I'm still bullish, so we'll see what happens. All right, let's see. How many times do you think rates will be lowered this year? I would guess probably 2 or 3 times this year. We'll see. All right, from High Climber 25, is FUD or FOMO better for my future as a silver investor right now? Neither one of those ends up being a good long-term strategy for the most part. FUD is fear, uncertainty, and doubt. It's, typically what people say when, as a retort to somebody who says everything is bad and going down. And typically that means that you're shorting things that you shouldn't short. You're not going long on things that you should be going long on. If you have that mentality. FOMO is, the opposite. It's, hey, everything is exploding up. I feel like I missed out, so I'm just going to buy here, even though I'm buying at the top. Looks like it's just going to continue. Typically, that FOMO sets in right at the end of a big bull run. So I don't like either one of those. If you had to pick one of those for silver, I would say FUD short term, FOMO long term. But either one of those is letting emotions dictate your trading strategy. And when you let emotions influence your decision making, more often than not, you're going to be making investment decisions that will lose you money rather than make you money. All right, from Shuli Konikita. How, in your opinion, will the war between gold and Bitcoin play off? This is taking a little bit from Saifedean Ammous, from his, I think this is from the Bitcoin standard, but it might be a little bit from the fiat standard as well. I think if it's going to play out with Bitcoin winning in the long run, it will play out like the following. When silver began its demonetization process, it was because of the invention of paper as a monetary vehicle. So when paper was invented, in terms of using it as money, Gold was still the money, but before paper, you would move the physical coin whenever, geographically, you would move it whenever you made a transaction. And so that made transactions and the money supply and the economy, it made it very sound. You had, just natural good deflation over time. Um, the limitations were it was very expensive to do business over long distances because you had to pay for transportation and security to move the gold. Um, and so and also the deflation over time meant that the gold became more and more valuable and too valuable for small transactions. So for small transactions, you had things like silver. The invention of paper meant you had centralization of the storage of gold, and the ownership of gold now changed hands instead of the physical movement of the gold actually moving for transactions. So it was still the ownership of gold that was changing for money, but you could leave it in place. And so that meant you didn't need the silver as money anymore, because you could, on a piece of paper, it could represent 1/100th of an ounce of gold or really any amount. You could also transact across longer distances because of the centralization. You could do batch settlement between banks with smaller amounts that needed to actually be transported, and so it was much cheaper, much more efficient to do transfers of payments across long distances, which increased globalization and therefore decreased costs of creation of wealth, because if you can transact across longer distances, that means that you have access to markets you didn't have access to before, access to goods you didn't have access to before, and relative advantages come into play a lot more strongly than they used to, because you can get goods from other places where it's cheaper to make. So different places and people can um, access bigger markets by prioritizing and specializing in the one thing that they're actually really good at. So that started the process of demonetizing silver. Gold still to this day has maintained its monetary asset value, um, because people continue to treat it that way. And so it still gets stored by central banks and sovereign wealth funds and large institutions as well as individuals, for its properties of being able to continue to store that wealth. But the issue with it is the same issue that started the demonetization process of silver, um, which was we need a new technology that we can make payments better, across larger distances, cheaper, more efficiently. But we don't want to sacrifice the sound money nature of gold. And so theoretically, that's the role that Bitcoin will serve as well in the digital age, because we had digital dollars serve that function, but because of the centralization and the control over that monetary system, we get inflation. And so it only serves a few people really well at the expense of everybody else. And so the ability for, or if we get that transition, I would expect the transition of Bitcoin replacing gold to be very similar to paper replacing silver. In other words, a very slow demonetization process where people use gold less and less and less as a store of value, and Bitcoin more and more and more. Again, that is if Bitcoin takes over. I'm not one of those Bitcoin maxis who thinks it's destiny that Bitcoin is going to become universally used as money. I think it's a much more it's enough of a possibility where it's worth putting a decent chunk of your net worth into it, for that asymmetric bet. But I don't like starting off with more than 5% because you don't want to risk a large loss in your portfolio. That's the number one rule of investing. Don't risk large losses. All right. Next question here from Feta Mike. What do you think of Intel Core Weave, short, medium, and long term? Um, Intel, I'm long. So this is a new position I just opened up within the last, I don't know, week or so. And so I am long Intel right now. By the way, long and short, just to clarify, I'm talking about my position direction. So if you're long something, that means like you own the shares or you own calls on it, you have a position that will make money if the value goes up. If you're short something, usually it means you're short the shares, or you can also be referring to a short position through the use of something like put options. And so Intel, I am bullish on, and that's maybe not short term. I would say medium to long term. It's a medium to long term play. I'm not. I'm kind of agnostic to what Intel might do in the short term. CoreWeave, I don't have an educated opinion on CoreWeave right now. I know there's lots of speculation about the business model and how they're making money and what they're doing and potential, um, maybe not straight up fraudulent, but accusations of uh, less than straightforward reporting. I don't have an educated enough opinion about that to be able to uh, tell you guys, an opinion, and I don't have a position on CoreWeave. Let's see here. From Poor Old Papa. So, do you think the Kitco price is true, or is the true price in where it is being bought in the retail market? There's always going to be a big spread between the bid and the ask. And so, and that, the physical market is different than the paper market because the paper market is basically speculation on the where the price will go in the future. The physical market has to account for the price of delivery and storage and security and transportation and all that. And so when you are dealing in a physical market, you're going to always have a much bigger spread between the bid and the ask. Meaning, if you were to go immediately in the next 24 hours, buy and sell physical gold over and over and over again, you're going to be losing, if you, let's say it's on gold, you're going to be losing like hundreds of dollars every single time, because there's always going to be a big spread. So the spot price is just going to represent, um, you can think of it like the middle price. And that's never going to be what you're going to get on either the buy or the sell in physical markets. Yeah, guys, tag me if you have a question directed at me. Otherwise, I'm kind of just assuming that you guys are talking to each other, which is completely fine. I just might miss your question if you don't tag me in it. All right. Question from Kaiser98. Do you think the Brenner cycle prediction will be correct for 2026? Interesting. So for those of you who aren't aware, the Brenner cycle, it's this old, I think it's from like the 1800s. It might be more recent than that, but I think it's from the late 1800s, where he kind of drew out like with these triangles, like cycles in the market. There's three different cycles that are kind of happening simultaneously, and one of them is like a shorter term cycle, one of them is midterm cycle, one of them is a longer term cycle. And 2026, according to this Brenner cycle prediction model, is supposed to be a year in which everything broadly does really, really well, but it's a year where you're supposed to be kind of like getting out and selling things in preparation for 2027, which I believe should be a bad year. So you can look up Brenner cycle, BRENNER cycle, and just look up, I'm sorry, it's Benner cycle, BENNER, Benner cycle. And you can look up, there's pictures all over the internet of this. And so you can look at it yourself, but, and I would show you, but I haven't quite been able to figure out how to share screen without making the stream glitch out. So sorry about that. But right now, 2026, it's allegedly going to be, one of those years where it says years of good times, high prices, and the time to sell stocks and values of all kinds. And then 2020, I guess 2027 is not included on that cycle. But going into like 2032 is 2032 is allegedly kind of like the bottom of the bad cycle, years of hard times, low prices, good time to buy stocks, corner lots, good, et cetera, and then hold till the boom reaches years of good times. And so I guess starting in like 27 through, 2030, 2031, those would be times where you're expecting things to go down. So I don't put a whole lot of weight in things like this because anytime there's validity to cycles that get discovered, oftentimes they get arbitraged away Because if you know everything's going to peak in 2026, well, you're probably going to start selling in 2025, which means in the future, assuming everybody knows about this, things will start to peak in 2025 instead of 2026. And so I don't really put a whole lot of stock into into these kind of things, especially because like look at the last cycle. It was like, okay, well, 20, it said, 20, let's see, 2019 was the year of like, really, really good. And then it was, 2023 was like the bottom of like really bad. And it's like you can kind of see some similarity there because, 2020 the crash happened. But even though there was like a crash in 2020 and then a crash in 2022, it was like from the bottom, or I guess the top of right before the crash started in 2020 all the way to, through the bull run and then the crash of 2022, it never got back down to where it was before. So if you were simply playing this and you were expecting, okay, well, 2019 is supposed to be the top, so I'm going to sell at the top of 2019. And then you're like, all right, well, 2023 is going to be the bottom, so I'm going to buy at the, beginning of 2023. Well, then you missed out basically on the entire bull run of 2020 and 2021. Um, and so even if you nailed the top and the bottom perfectly, you still did not you still lost. You still were buying at a higher price than where you sold. And the reality is, are you going to be able to actually nail that perfectly? Probably not. You're probably going to be at least a little bit off. Um, and so yeah, I don't put too much stock into cycles like that, but historically there is, it is kinds of lines up, fairly close. You can find some correlation there. All right. Question from All Nighter Hider. Could you talk about legal ownership of stocks versus what is now beneficial ownership, price movement? What is the risk if this system works as it is? There, the risk for something to happen in which um, that difference in the way shares are held, for that to actually matter, would mean that that there's nothing you could have done about it. Like even holding shares like the old school way wouldn't matter. Um, the basically the entire financial system is built with these rules in place. And so it's kind of like if you're super concerned about um like if you like let's say like you were trying to hedge your portfolio so that your portfolio wouldn't go down in value too much if there was like all out global nuclear war. Well, it's like in the case of global nuclear war, you're not going to care about your portfolio value. It's whether it's on paper worth zero or on paper worth $1 billion, it's not going to matter to you because those nukes blew everything up and you're just trying to survive. So a world in which the dangers and the risks that are exposed by books like The Great Taking, in a world in which those risks are realized, they don't matter anyway. Um, okay, let's see. Next question from 1717 Beaker. Hey, Joe, do you have any recommendations for a routine on researching and validating info when doing financial investing? There seems to be a lot of conflicting info. Well, number one, you'd expect there to be conflicting info about everything. And if there is not conflicting info, meaning everybody agrees on one thing, like being, let's say, very bullish, then that means that there is no more buying that could happen from here, which means that by definition, we're at the top. I don't know what that was. That looks like a little that black fuzz, or is that sorry guys. I just noticed something on the camera. Yeah, it's black fuzz. I thought it might be a bug. Um, so So yes, you would expect there to be conflicting info, and if there's not, then that's a red flag. You should take a contrarian position, because as soon as there's unanimous, um, con- uh, um, what's the word? Um, Consensus on whether an asset, they're bullish or bearish on it, then that's when bottoms and tops get put in. So that's number one. Expect conflicting info. And so then what you have to, because this is like the idea that Ray Dalio talks about. In order to make money investing, number one, you have to bet against the consensus, and then the number two, you have to be right. And the consensus is always just the current price is the consensus on the value based on all the buying and selling and potential buying and selling by all real, actual, and potential market participants. So by you ever taking any position, um, you are making a statement about what you believe the market to be wrong about. And even if that's you're all in cash, you're saying that you believe that that will be a better return for you than owning assets, because you think assets will go down. So you're always going to find conflicting information. And so number one is volume. It's difficult. It's difficult to beat volume. So when in doubt about the proper strategy or the proper tactics or the proper like method of doing something, um, if you don't know what the proper steps should be, then the biggest hack to be able to make sure that you have the best possibility of still winning is sheer volume. It's like if you if you're not sure if the person who analyzed this asset is trustworthy, or if they did the right work, or if they are accurate in their assessment, the best way to figure that out is to do 10 times the amount of research so that you have a baseline to compare to. You will notice then outliers, and okay, well, there seems to be some sort of a convergence of opinions around this specific range on this asset. And there's these couple people who are way out here in left field on, they're super bullish on it. A couple people who are way out here in right field, super bearish on it. But in the middle, you kind of have this consensus ground that people think, this is the range that it's potentially going to be in. And just because you have a range there, that's like that doesn't necessarily mean that that's going to be wrong, because most of the time the consensus is actually right. And so then that gives you a baseline to be able to look at and incorporate the other things that you know about, whether it's macro or the asset class or the industry or whatever it is, and see if there is an edge for you to play there, because many times there's not. If you look at something and you're like, okay, well, yeah, I think this is priced appropriately, that means you don't have the ability to purchase that with an expectation of a gain in the future, because you think it is priced appropriately. Um, and so I think it's just a volume game. It's not a routine or a method. It's just more research, more learn about it, more read about it, more. Um, and every once in a while, then you're going to come across something where you're like, okay, it seems like the market is pricing this thing wrong. As far as I can tell, the amount of money this will make, the amount of profits this will make, the amount of whatever, it seems like the market is pricing this wrong. And those dislocations in the market do exist, and they do happen, and that's where the real profits come from. And those kind of situations, they don't come around that often, and so you have to be casting a wide net and researching a lot and learning a lot and reading a lot and looking out for these opportunities for you to come across them. If you're not putting your net in the water, a a big school of fish might swim by, and you may never know because you didn't even have your net in the water. So you have to be constantly researching, constantly searching, constantly looking. And by the way, that's what I do. And I know that most people don't have the time to do that, especially like full time, which is why I sell the products that I do, which is basically just sharing my trades that I'm making. Because I know that sometimes it can be difficult to add that into your day job routine. But yeah, I think volume is the key. Okay, next question from Grovey. I read through Citrini's 26 trades for 26. I think it's kick-ass research. Did you see it? I did not. I did not see it. I wonder if you meant Citrini. Trini Investments 26 for 2026. Okay, yep, they did. Yep, that was a couple days ago. All right. Well, I'll take a look into it. I'm not familiar with the 26 that they recommended. I didn't see it, so no answer for you there. Sorry. Tristan Cowart, have you done any research on XRP? If not, do you think a digital asset is used as an asset for transaction settlement would benefit from adoption and go up in price, or net neutral? I've done a very little bit of research on it, and I was not impressed in terms of expectations of anything that would cause me to put any money on the line, let's say. I am not. I mean, I'm probably. I have to always give this disclaimer because people see clips and hear me talking about Bitcoin or cryptocurrencies on online, and then they're like, "Oh man, this guy knows nothing about cryptocurrency. I can't believe he's talking about it." It's like, well, A, people are asking me about it. B, I've never claimed to be an expert on these things. It's just the more that I've researched any of these and the more that I learn about them, the more I like Bitcoin and dislike everything else. And to be fair, it's not a lot. I know a lot of people know a lot more than me about these topics, but the little bit that I have looked into XRP, I don't see any compelling reason to purchase it. It doesn't make sense to me why it would drastically increase in value from usage. It doesn't make sense to me why it has any moat other than potential government fiat, declaration. And especially long term, there's nothing that XRP does that layers on top of Bitcoin cannot do. All right, next question. This one is from 1717 Beaker. Thank you so much for the super chat. I appreciate it. Oh, not a question. Just says thanks for all your help. Well, my pleasure. Thanks for the super chat. Okay, next question. Is it possible to get certificates for ownership for stocks these days? If yes, how? It is possible. It's like $500 for a stock certificate. So it's just it's irrelevant. It's unnecessary. It is not useful or helpful in any world in which your shares in your brokerage account become worthless or not usable or not sellable. Your physical stock certificate is not going to do anything either. Let's say your broker goes under, all of your shares just get transferred to a new broker. You don't lose them. Doesn't matter how much you have. The only thing at risk is your cash. If you have cash in excess of the SIPC limits, which I believe are $350,000 per person, per broker, any cash beyond that, then you might be at risk of losing if they don't have insurance beyond that to cover it. But all of the shares that you own, of shares of ETFs, shares of stocks, anything like that, that's all just going to be transferred over to whoever absorbs the accounts. That nothing happens to those shares. All right, let's see. Next question here. Where'd you get the hoodie? It's Under Armour. Just a cotton Under Armour. I don't remember where it's from. I think I got it as a gift, Christmas gift, something like that. Probably from Amazon. All right, next question from Shipwrecked Traveler. Have you read Stephen Moran's paper titled Activist Treasury Issuance as a Workaround to the Federal Reserve? I've not read that one. Activist Treasury Issuance. Activist Treasury Issuance. I read his other one on deregulating banks in order to allow them to buy treasuries an unlimited amount so that QE doesn't have to happen as much as it's needed to. Activist treasury issuance and the monetary policy implications. I'll have to look into that. I don't have any thoughts on it right now, but I will look into it. Reminder, everybody, if you have a question that's directed at me, try to remember to tag me in your comment there. That way I see as it comes up. Otherwise, it can get lost in the chat with you guys, with all the extra comments in there. What are your thoughts on the following? The secured overnight financing rates blew past the upper bound of effective funds rate on December 31st, and it featured the largest Fed repo usage since 2020. The 10-year yield jumped pretty significantly today. It's, in my opinion, absolutely 100,000% completely irrelevant and not indicative of anything significant happening anywhere in the financial system. Um, at year end and at quarter end, banks have to do what's called window dressing, which is they just have to make their balance sheets look good, and many times that means they need extra cash. The overnight repo markets are where banks go to either offer cash or get cash, and cash is exchanged temporarily for collateral. It's literally like a big pawn shop where a bank will be like, okay, well, I've got collateral. Another bank will be like, I've got cash, and the bank will be like, all right, you take my collateral, I'll take your cash, and I promise to repurchase it in the future. It's a repurchase agreement. That's why it's called repurchase. Um, and at quarter end and especially at year end, cash needs are really, really high because everybody's trying to get cash. In the last couple of years, this hasn't been really an issue because there's been so much excess cash. That's why the reverse repo facility at the Fed had trillions of dollars in it because that was where all the excess liquidity was. So getting cash was not an issue. But after 2 or 3 years of QT and draining liquidity from the system, and that reverse repo balance went down to zero, now suddenly there's not all that excess liquidity floating around. So at quarter end and year end, when banks go to get their liquidity, that cash that they need for just that one night, they're all rushing to do it, but nobody actually has it anymore because it's all been sucked out by the Fed. And so when they need it, where do they go? They go to the Fed to get it. That's what the Fed's standing repo facility is for. Now you'd say, well, why hasn't it ever been used before 2020? It's because the standing repo facility was stood up in 2021 because they knew at some point in the future it would be an issue. They didn't want 2019 to happen again where they had to intervene proactively. So they just set up a standing repo facility where banks could just come to the Fed and get the liquidity that they need directly from them. And so this facility was started in 2021 as a response to what happened in 2019, and it was not needed until the reverse repo facility at the Fed got drained to zero. Now it's needed, but it's working like it's supposed to, evidenced by the fact that banks are getting all the liquidity they need from the Fed and they're not collapsing. um, and so we also see that has an impact on overnight rates, obviously, because when everybody's scrambling for cash, that's going to have an impact on those overnight rates temporarily. And also, we saw a spike in usage of the reverse repo facility at the Fed, which means that there were actually some players that had excess liquidity. And so it was just spread unevenly throughout the financial system. But again, it's just some volatility in those reserves overnight. Nothing to be worried about, and it's no signal of anything happening. By the way, the Fed is also already doing QE again in order to undo some of the tightening on bank reserves that they did over the past couple of years. And so there's no stealth bailout going on. There's no, this is just standard. It's all unwound within a couple of days when these spikes happen. And now if the standing repo facility wasn't there and the Fed wasn't intervening in the repo market at all, then yes, of course, there would be issues. Like it would be just like 2019, actually, where you have a repo rate spike overnight and banks can't get the liquidity that they need from each other because it's all been sucked out. It's not there anymore. And so then you'd have an issue, and then you'd have potentially like the reason why they intervened was to prevent what happened during the great financial crisis. It was the overnight inability to get the cash, the liquidity they needed, that caused banks to start collapsing overnight. And so, yeah, absolutely. Without the Fed's standing facility there to offer the liquidity needed, then yeah, we'd be in trouble. But it's there, and so it's not that's not going to happen. Um, okay, let's see. Next question. What's up, Economic Ninja? Enjoy running your excavator. I wonder what your what do you what are you using your excavator for right now? All right, next question from Edward Bowles. What sector are you most interested in for 2026? Really like commodities. I like energy a lot. Um, Base metals. And when I say energy, I'm not even just talking about like, just oil or uranium. I'm talking about kind of the whole pipeline, um, infrastructure. I like data center companies a lot. Those would probably be two that I would put at the top of my list as of right now. All right, next question from Black Spider 29. Do you still see rates going up for the next 40 years? I know you say that's the new debt cycle. Maybe not 40 years, but at least 10 years. These a lot of times like these cycles, this is like what I was talking about with the Benner cycle earlier. There's nothing magical about specific numbers of years or time frames in these cycles. So the next phase of this long-term debt cycle might only last, 15 years total. It started in 2020. The last one, it really kind of started in 1945, ended in 1980. So it's a little bit less than 40 years. So this last phase of the cycle started in 1980, ended in 2020. That was just about 40 years. So 35, 40, 45 years. This one, it could be a lot shorter. If things move a lot faster, it could be a lot shorter. And it's already been 5 years now. It's not slowing down. So I would anticipate it lasts at least another decade, but who knows? But yes, long-term rates I anticipate will go up. Um, the caveat to that would be if the Fed institutes yield curve control, and they force all of those interest rates lower. But what that will do, that doesn't really, in my opinion, negate my opinion about what the next 10, 15, 20 years will look like in terms of inflation and rates, because that does make inflation go up. And then interest rates for everybody else will go even higher. So even if the government can borrow at a rate lower than the rate of inflation, interest rates on things like mortgages and for businesses and everything else will be much, much higher. Um, Next question. Real silver is diverging from SLV, $130 per ounce in Japan, over $110 per ounce in Shanghai. COMEX is getting drained. Silver sold out online. Are you still watching SLV? Well, SLV is the easiest way to trade it. When I'm looking at the silver price, typically I'm looking at the spot price. But yeah, you're going to have again, there's a difference between paper markets and physical markets, because physical markets require transportation and delivery and storage and security. Um, Paper markets are essentially um, speculation about the price. And so you don't have to account for all of those extra costs. And so you will absolutely, from time to time, have wild differences between those, especially when there are shortages or local shortages, even of physical. But that doesn't mean that the spot price or the paper price is um, irrelevant or manipulated or wrong. It just means that there's temporary local shortages of physical. Um, Next question is from Mook Davis. Could you explain taxes on withdrawals from a taxable brokerage account? There's no taxable event caused from deposits or withdrawals in a regular brokerage account. It's just like a bank account. You put money in, you take money out, the government does not care on a regular taxable brokerage account, just like they don't care with the bank account. What they do care about is gains and losses. So you buy something with that cash and it goes down and then you sell. Now you have a realized loss. You buy something with that cash, it goes up and then you sell. Now you have a realized gain. At the end of the year, you net out all of your gains and all of your losses. And then if you have a gain left over, you will owe taxes on that gain, whatever that gain was. Depending on whether it's a short-term gain or a long-term gain, will determine what your tax rate is on those gains, what you have to pay in taxes on those gains. But in a regular taxable brokerage account, that's all the government is watching. How much you made, how much you lost. It doesn't matter at all the money you put in and put out. You could put $1 million into the account, leave it in cash, pull $1 million out. It's not even reported. It's the opposite with retirement accounts. Retirement accounts, the government watches what you put in and what you put out or take out. They don't watch the gains or the losses inside those accounts. So traditional retirement account, they're going to give you a deduction on the amount you put in, and then they're going to tax you as income on the amount you take out. In a Roth IRA, you're not going to get a tax deduction with the money you put in. They're still going to cap you on how much you put in. And then as long as you wait until retirement, they're not going to tax you on the money that you take out. All right. Next question. From Feta Mike. Why is Intel $2 up today and $1 up today? Well, semiconductor stocks overall are had a very good day today. So if you look at Micron, it was up, 11% today. Intel was up 6.7% today. ASML was up 8.78% today. TSM was up 5.17% today. Microchip, MCHP, was up 2% today. What am I missing? AMD was up 4.3% today. So overall, the entire sector, the entire industry was up a lot. Same thing with many energy stocks. So like UUUU, that is a nuclear energy company. They were up 14% today. URA was up 7.7% today. URNM was up 10.13% today. And so like Oklo as well, they were up 8.42% today. SMR was up 15% today. So across the board, these sectors did very well today. They were up a lot. By the way, guys, a lot of those stocks that I just listed and rattled off the top of my head, they're at the top of my mind because those are trades that are currently open in my trading program, meaning we had a pretty good day today. Okay. Let's see here. Question from Edwin, the Magic Engineer. Real silver is diverging from silver. 100. Oh, yeah. We already talked about that one. Guys, if you put a question in for me, typically it takes me a while to see it because I'm working my way through as they come in. And so it's just give it a second before reposting the same exact question. Unless you see that I'm starting to answer questions that came in after yours, then I must have just missed it. All right. Question from Sam the Ram. Just found your channel. A video from 2 years ago that you made popped up in my feed. What videos you made have you been the most correct on or proud of? This is going to be like a little bit of a different answer, but back in, I think it was March. Let me give you the exact date. It was earlier this year. I believe it was March, might have been February. I'm sorry, when I say this year, I meant last year. It was early 2025. Where was it? The video is titled like, "This is the best time to start investing," something like that. It was at the beginning of 2025. Oh, yeah, how to get started investing in 2025, and that was March 3rd of 2025. And basically, the main point that I was making in that video, and by the way, March of 2025, um, was, like, literally right when that 2025 crash started. So at the beginning of this crash, I released a video and said, like, "Right now is the best time to start investing." And the point that I was making in that video was, even if this is the beginning of a downturn and we have a crash from here, you're going to be dollar cost averaging at the very least all the way down and all the way back up, which means by the time we get back up to where we are right now, your cost is going to be lower. You don't know how to time markets. And so if you're waiting for the crash, odds are that you won't actually time it right and that you will miss the bottom, and then you'll miss the run up, and then you'll be mad you missed it and you'll be waiting for the next crash. And I have seen comments or emails or posts from a lot of people directed at me where they said, basically like, I missed the bottom in April because I was expecting the crash to continue. I missed the run up because I thought it was going to keep on going down. And so I just decided to invest. And now I'm, a lot further ahead than I would be, obviously, if I decided to, never decided to invest. I even had a lot of people say, yeah, I was one of those that was just waiting for the crash. And because of what you said, I decided to invest in, March of 2025. And it stung in the beginning, but now I'm way up on everything. And so the point is, over the long term, as long as you are investing with a long-term time horizon, doing your dollar cost averaging, picking high quality assets, it's very difficult to be able to time exactly when the market's going to crash. And if you're trying to do that, most of the time you're just going to miss it. And that was that was kind of the point of that video. Um, some other videos that I've made that I'm really glad that they did well. Like, one of them is the things that the Bible says about building wealth that you didn't know were in the Bible. Um, so I'm really glad that that one did well. I'll probably do a follow-up video to that one at some point because that seems to be a favorite of many people. Um, Next question from looking for tags. By the way, if you guys have a question for me, tag me so I can see it. Super chat from Never Sarcastic Man. Thank you so much. I do appreciate that. Are you still loving IREN? Yes. Still long. Very bullish on it. That is also one of the positions that I sent an alert out for that position in my trading group. Let's see. Back in early 2025, a lot of my members got in around the $5, $6, $7 mark, and we trade options. So you can imagine the kind of gains that we're sitting on right now for that position. All right, let's see. Next question. Um, do you have any opinions on collectibles, trading cards, comics? That's it. Those kind of markets are markets where I say stay away unless you are committed to becoming an expert and paying the cost of becoming an expert. Um, it's easy to get sucked into these kind of markets because you see what looks like easy money being made, but getting sucked in at the beginning like that is basically you're getting tricked into gambling. And you might have a few easy wins. overall you'll probably lose money. If you're committed to becoming an expert in it and doing the research and doing the studying on watching the trends and seeing what people are looking for and playing the long game and saying, okay, well, I'm going to be treating this like it's a business, and setting myself up to make money over the next 10, 20 years in this market, then I think go for it. If not, they're a little bit too illiquid, a little bit too much leaning towards the gambler. Um, the average person who's just dabbling it on the side, it's not going to be worth the risk, especially because the amount of dollars, maybe the return that you'll get on buying the random comic book or, pack of trading cards or, collector's card from online. Maybe, you'll dabble in it. You'll make a couple $100 here and there over the course of a couple of years, but it's like, that's not going to change your life. And the odds that you make money doing that rather than losing money are not great. So if you can become an expert, do it, treat it like a business, and play for the long term, not for the short term. Fritter 6546. He's a part of my trading group. He said that he got into Iran on $2, or I'm sorry, on February 21st at $2.85. It's the option price. So again, you guys can imagine the gains right now. All right. Let's see. Next question from Edwin, the Magic Engineer. Do you have anybody in your circle who can clearly explain? Are we still live? Wow. That was, I don't know what just happened there. Just cut out. Had to, oh my gosh. Sorry, guys. I don't know what's going on here. All right. We're just gonna have to deal with that. All right. Yeah, probably bad coffee or something. It just kicked me off and I had to reconnect. So I'm glad it didn't kick any of you off. What was the question? The question was about Bitcoin. Do you have anybody in your circle who can clearly explain the very real problems with Bitcoin? Yeah, I mean, I'm still watching it and I have not. I know I need to do some more research into it. I know that there's problems, but as far as I can tell, I mean, I haven't seen anything yet that looks like an insurmountable problem, like a um like a nail in the coffin type of thing. Things like blockchain size, transaction speed, and cost to transact, like those are not real problems. Again, like the monetary systems are layered systems. Um, and like the bottom layer of the dollar system right now has the exact same problems that you're describing. That's why when you buy groceries at the grocery store, you don't send a wire. When you split the check at dinner, you don't send a wire. Like you're transacting on higher layers because you don't care about settling on chain. Think Trump could flip and nominate Moran for Fed chair. I don't know. I don't really see anybody predicting that, or even like mentioning that as an option. I don't know. I wonder if he's eligible. I haven't looked at that. I wonder if he's even eligible. Let me see real quick. Okay, yeah, he is eligible. I don't know. I don't Probably not. I would guess. I would not put money on it. All right, next question. Followed you since early 2021. I bought my very first stock position because of your videos. I followed your principles and have blessed my life significantly. Well, thank you. That means a lot. I'm really glad to hear that. The reason why I spend so much time making YouTube videos, which are accessible to anybody who wants to watch them for free, now doing lives. I spend time posting on Twitter. Now I have a newsletter that I send out twice a week. The reason why I do all this, putting out free content, is because, well, years ago when I was going through an exercise about trying to plan out a direction for my life. So when I was a stockbroker, I did not like having a job, did not like being employed, but it was like, good money at the time. Didn't really know what else I should or could be doing. The whether you want to attach anything spiritual to this or not is up to you, but the phrase that came to mind that I could not, ignore was that my role was to take care of my tribe financially. And the kind of the image that corresponded to that was those Russian nesting dolls where there's like one little one inside of a bigger one, inside of a bigger one, inside of a bigger one. The idea being that the more wealth that I produce and the more quality work that I produce and the better job I do of creating wealth and teaching people to create wealth, the larger that tribe can become. So at first it's like, okay, be able to provide for my kids and my wife. If I can nail that, then I can work towards creating the resources to take care of my extended family, my parents, my in-laws, my siblings, my nieces, my nephews. If I can nail that, get beyond that, create more resources than that, I can slowly start to expand that circle of what I say is my tribe. And so that's the kind of the long-term guiding mission, like life mission. And it's why I do the work that I do, because I think that empowering other people to do the same thing is going to make, it's made my life a lot better. If I can empower other people to do that, it'll make their lives a lot better. And it's like a bunch of little concentric circles that are expanding all over the map. It's going to, in a very real way, improve not just individual lives, but also communities. So anyway, I'm glad that you said that, because that's in a very real way, success stories like yours are the reason why I do what I do. All right. Next question from No Handle 45. Longtime listener, first time caller. What are your thoughts on AMC? Downside, and how would you protect yourself? Stop, no stop. I like protecting myself with puts as hedges, because stops, you can have gaps. Unless you're just, day trading, overnight gaps can really hurt you. Okay. So like from a chart perspective, AMC is like, I'd be running the opposite direction, and I wouldn't even like be shorting it necessarily, because you can get violent short squeezes out of something like this. I don't even know what their short interest is. Maybe they're not even close to a short squeeze, but you can get violent reversals when you have something that goes down and down and down and down and down. I mean, from a high of $390 per share, from a high of that down to 100 or $1.60. You can get violent reversals. So I wouldn't even short this, because you could wake up tomorrow morning and this thing could be at, $2.50 or $3 from like one thing of news and a squeeze. In fact, that's happened before. I mean, if you just look at May of 2024, it was trading at $2.98. The next day it closed at $5.18. The next day it peaked at $11.86. So that kind of move can happen so quickly, and that's why when you're short, you have unlimited loss to the upside. So I personally, I'd be playing it with options, just so that I'm not risking something like that. if you with options, because they're inherently leveraged, you can keep your position size really small so that if it doesn't work out, you lose a very, very small amount. But if you are correct, then you can make enough to have a meaningful impact on your portfolio. So you manage risk through position sizing rather than stops. Um, Other than that, I don't really have a really good opinion on AMC from a fundamental perspective. My gut feeling is that the movie theater industry is still on its way down and dying. People don't value um, people don't value going to the movie theater enough to maintain the same like level of business activity in that product that that used to exist. People value being able to, have the convenience and the comfort of watching from their own homes with TV sizes nowadays and TV prices and streaming and all that. It doesn't seem not only that, but like the total amount of entertainment that is available out there is a lot more today than there used to be. People don't really think of it this way, but like podcasts, YouTube videos, like TikTok, that's all time that people spend being entertained by media. That used to be like movies had a monopoly on that. Um, and so my kind of gut feeling on this, which is not a very good, not, I'm not like, this is not, don't invest on gut feelings. My gut feeling on this is that, the movie theater industry continues to decline and consolidate until there are just a few movie theaters. Like today, there's still like, you can still go ride horses for fun. Um, a couple places in each, big city outside of each big city. Um, but it's not the dominant form or it's not like everybody in the world has a horse like they used to for transportation. Um, and so I don't think that movie theaters will ever 100% go away, but I think it's still probably got a long way to fall. All right, let's see. Are you not worried about the yield curve? At what steepness would you get out? How much are you invested in equities at these high PE ratios? Why not wait for a proper correction? Well, number one is because just because you get a correction doesn't mean that the PE ratios come down to something that is historically considered normal. The bottom of the crash in April, PE ratios did not get to a point where a lot of people consider them normal. In fact, the reason why sometimes crashes happen is because people expect, because PE ratio, it's a ratio. So both sides of that equation can move. So if you expect earnings side to go down in the future, then even if the price falls, maybe that future expectation of of earnings doesn't make that current price attractive enough. So just because you get a proper correction, and by proper correction, I am assuming you mean like the commonly accepted definition of a crash, which is 20%. And we've had 3 of those in the last 5 years. And not once did it bring equities to a point where people looked at the P ratio and said, okay, well, we're no longer overvalued. Um, and if you were waiting for that, well, you're just losing to inflation the entire time, which is the second point, is that the more debasement of the currency expected into the future, the more justification of higher valuations. Um, if you look at the valuations of stocks in Weimar Republic in Germany and in Venezuela and like anywhere where you've experienced the extreme of like hyperinflation, valuations look extreme. It's because you're protecting yourself against debasement. And so the more inflation you anticipate into the future, the more it actually justifies those higher valuations. And the steepness of the yield curve would ostensibly continue alongside of that as long as you don't get yield curve control, because the yields have to compensate for that inflation. So, assuming we don't have policymakers get religion and allow deflation, then it seems like the current path continues. Um, Question from Verinder Singh. Why do media and some YouTubers focus on the standing repo facility concluding liquidity crisis, but the Fed says it's regular market operation? I mean, it is. If the Fed wasn't intervening, then yeah, banks would be in trouble. There's not enough liquidity for them to get it from each other. That's why they tap the Fed. But that's why the Fed set this facility up a couple of years ago, is specifically for this purpose. Um, so I mean, it exactly what people expected to happen and exactly what the Fed expected to happen and exactly what banks expected to happen and how it's supposed to work according to how they set the system up. That's what happened. Um, so it is typical or regular market operation in the sense that that's what they set it up for and that's what happened and that's how it was used. Okay. Question from Alex4610. Tesla Bloomberg Originals on YouTube recently reported that Tesla doors have a safety issue and a recall may be possible. How much of an impact will this have on Tesla stock? Probably not much because I mean, you just have to look at how much it might cost Tesla if they are, forced to do a recall on, their entire fleet or a portion of their fleet and replace locking mechanisms or something like that. It might be a significant cost, but it's like, okay, well, what is that cost relative to the anticipated future earning potential from everything else Tesla is working on? And that's the majority of the valuation of Tesla, by the way. So I don't think that it would have much of an impact, especially long term. All right, I'm going to do one more question here. If yield curve control is implemented, what effect would you assume it would have on current bond holders of 10 plus year duration? Depends on where they do the yield curve control at. Because maybe they only do it up to 10 years because, if they're saying, okay, we're going to hold the 10 year at 3%, but we're not going to touch the 20 or the 30 year. Then it would probably cause some big losses for 20 and 30 year holders and some big gains for 10-year holders. It also depends on where you bought it at. So if they're saying, okay, we're going to hold the 10 year at, let's say 3%. Well, if you bought it at, any time in, let's say prior to September of 2022, that wouldn't really do anything for you. I mean, it would give you a gain from where we're at right now, but um, not long term for you because you bought it when it was 2% or 1.5%. So it all just depends. Where are they going to hold the yield? Are they going to do it across the entire yield curve? And where did you buy it at? So all right, guys, that's it. We've been going for a little over an hour now. Happy Friday. Happy good start to the year. We had a little bit of a sputter at the end of 2025, but at least the market, um, you know, uh, starting off into 2026. I guess the indexes overall that, SPY ended 0.18% up and QQQ ended 0.19% down. But there were a lot of other assets that were moving in extreme movements. That Caterpillar was up 4.5% today. That's crazy. So either way, exciting start to the year. Good luck. Happy trading. Happy investing. And I hope all of you have an extremely successful and abundant and bountiful and fulfilling 2026. So here's to that. See you next time.